So, Hedera just scored a massive government partnership with Switzerland, and the price, it's sitting at 21 cents, caught between a potential explosion to 40 cents and a brutal crash to 0.09 cents. One analyst sees a textbook bullish flag that could send HBAR soaring. Another analyst, they're pointing at a descending triangle, screaming, danger. And here's the wild part. Switzerland just voted to adopt a government-backed digital ID system powered by HEDERA'S technology. This isn't some random DeFi project anymore. We're talking about a real-world, nation-state level adoption. So why isn't the price moving? What's really happening behind the scenes? And more importantly, which way is this thing about to break? Stick around, because what I'm about to show you could change how you view Hedera forever. What's up, crypto fam? Welcome back to the channel. If you're new here, I break down the crypto market so you can actually understand what's happening without the jargon overload. Today's video is crucial because Hedera is at a crossroads that could determine whether you're celebrating gains or licking wounds. So smash that like button right now, hit subscribe, and turn on notifications because I'm dropping videos like this every single week, and you don't want to miss what's coming next. Alright, let's set the stage. Hedera is trading near 21 cents, and the market is sending completely mixed signals. On one side, we've got a bullish flag pattern that looks like it came straight out of a trading textbook. On the other side, there's a descending triangle that's making traders nervous. And right in the middle of this technical tug of war, Switzerland just did something absolutely massive. In September, Swiss voters approved a national electronic ID system by the slimmest margin you can imagine, 50.4% to 49.6%. And guess what's powering the infrastructure behind this digital identity system? Hedera. Specifically, a platform called IDTrust was built by the Hashgraph Group using Hedera's distributed ledger technology. Now, before you think this is just another crypto project slapping partnership on their website, understand what just happened. Switzerland, one of the world's most privacy-obsessed nations, just greenlit a government-run digital identity system. No private companies are managing your data. No sketchy middlemen, just pure government-backed infrastructure running on Hedera's network. The Hashgraph Group came out swinging in support, saying Switzerland's approach aligns perfectly with their vision of secure, citizen-controlled digital identity. This isn't vaporware, this is real adoption, the kind of adoption we've been waiting for since 2017. But here's where things get interesting, and honestly, a little confusing. You'd think news like this would send HBAR to the moon faster than a SpaceX rocket. Instead, the price is stuck. It's hovering near 21 cents, barely moving, while traders argue about what happens next. According to analyst Butterfly, we're looking at a bullish flag pattern on the 2-day chart. For those who don't geek out on chart patterns, a bullish flag happens after a strong move up, followed by a period of consolidation. Think of it like a coiled spring. The price breaks out of a descending channel, shoots higher, then takes a breather while smart money quietly accumulates positions. Butterfly is projecting a breakout toward 35 cents to 40 cents if this pattern plays out. That's nearly a 100% gain from current levels. Sounds amazing, right? Not so fast. Another analyst is waving red flags all over the place. They're pointing at a descending triangle forming on the 1-day chart, and if you know anything about triangles, you know they're often bearish continuation patterns. This analyst sees HBAR potentially dropping to 0.09 cents if sellers gain control. That's a 34% crash from here. So which is it? Are we gearing up for a rally to 40 cents, or are we about to watch this thing collapse to 0.09 cents? And why is the market so indecisive, despite Switzerland literally adopting Hedera technology at a national level? The momentum indicators aren't helping either. The RSI is stuck below a downward-sloping resistance line, showing continued selling pressure. The MACD is flatter than a pancake, sitting in a narrow range with basically zero bullish divergence. Translation: there's no clear momentum in either direction. It's like watching two heavyweight boxers circle each other, waiting for someone to throw the first punch. Alright, let me give you my take on this mess, because there's actually more clarity here than it seems. The fact that a sovereign nation chose Hedera for its digital identity infrastructure validates everything the project has been building toward. The IDTrust platform is brilliant. It tackles real problems like fragmentation, vendor lock-in, and data overexposure using self-sovereign identity technology. Citizens can control what personal information they share, credentials move freely between platforms, and everything is verified through trusted ledger technology. In my opinion, this is exactly the kind of use case that separates legitimate blockchain projects from meme coins and pump-and-dump schemes. But, markets usually move on technicals before fundamentals actually catch up. And right now, honestly, the technicals are at war. The bullish flag that Butterfly identified is, well, totally legitimate. These patterns, historically, they tend to come right before continuation rallies, especially when they show up after a clean breakout from a descending channel. If HBAR closes decisively above 22 cents, we could absolutely see momentum shift toward 35 cents or even higher. The setup is there. The real question is whether buyers have enough firepower to break resistance. On the flip side, the descending triangle is equally valid. According to the analyst warning of downside risk, HBAR keeps failing to push above 22 cents. Each rejection weakens buyer conviction, and if support at 20 cents breaks, we could see a cascade toward 18 cents and potentially 0.09 cents. That's not fear-mongering. That's just what descending triangles do when support fails. Here's my expert opinion. Hedera is in a classic accumulation zone. Trading volume hit $288 million, which is moderate but not explosive. Volume spiked early during an upward move, showing buyers supported the rally initially, but volume faded during the second half of the session, indicating traders aren't confident enough to push beyond short-term resistance. This tells me we're in a waiting game. Big players are watching, but nobody wants to make the first move until the pattern breaks. So, let's talk about the obvious question that everyone's asking. If this partnership is so huge, why isn't HBAR pumping? The simple answer is, the market is forward-looking, but it's also reactive. Right now, traders are really focused on technicals because, honestly, the fundamental news just hasn't translated into immediate price action. It's kind of like watching a slow-motion train. You know it's moving, but it just doesn't feel urgent until that momentum finally kicks in. The bullish flag suggests patient traders are accumulating while volatility remains low. That's smart money behavior. They're not chasing pumps. They're building positions quietly, waiting for the breakout. If HBAR closes above the flag's upper trend line, we could see a surge toward 35 cents, or even 40 cents as momentum traders pile in. That's how patterns like this work. They coil up, then explode. But the descending triangle is the bear case we can't ignore. If HBAR fails to hold 20 cents, the technical damage could trigger stop losses and algorithmic selling. That's when things get ugly fast. A move to 0.09 cents would represent a 34% drop, but more importantly, it would invalidate the bullish setup entirely. Traders would exit, momentum would die, and we'd be stuck in a longer consolidation phase. So what's my take? I think Hedera is setting up for a big move, but the direction depends on which pattern breaks first. So, the Switzerland partnership is honestly a long-term game changer, but, markets really don't care much about the long-term until those short-term technicals start to line up. If buyers can actually reclaim 22 cents and manage to push even higher, the bullish flag could, play out beautifully. But if sellers break through 20 cents, we're probably heading lower before any real recovery can begin. If you found this analysis helpful, make sure you smash that like button and drop a comment below telling me what you think. Are you bullish on Hedera, or do you think we're heading lower? I want to hear your thoughts. And if you haven't already, hit that subscribe button and turn on notifications so you don't miss my next video. I've got some insane breakdowns coming up that you're not going to want to miss. Before you go, check out my other videos. Alright, that's it for today. I'll catch you in the next one. Peace. Quick reminder, this is not financial advice. Crypto is extremely volatile and risky. Do your own research, understand the risks, and never invest more than you can afford to lose. Always consult with a financial professional before making any investment decisions. Stay safe out there, fam.